so what happened last week? Well, last week we had a sell off to the downside, okay? Clearing internal liquidity here, okay? And from there, we went higher, approached this high. You said we banged our heads into that high here, okay? False reaction to the downside. And then we moved higher and took it out, okay? So now anybody that was selling below has now been taken out, okay? They've been liquidated. And that's what provided this bearish move to the downside. So what I marked in the forecast earlier in the week was I was interested in price at this low because we were building liquidity at it, right? We stabbed into it once here, over here, and we've been hanging out essentially in this low for quite some time, okay? So I wanted to see price below it if we were looking to be involved in any longs on gold, okay? So starting off, we will go to New York session. This is usually where I hop on. So let's fast forward to New York here. Okay, perfect. So now, since we have taken out this low, okay, this tells me anybody that's looking to sell, they're going to be interested in selling up here. Why? Because we've taken out this low. So retail is going to be seeing this low being taken out as that BOS, okay? That momentum switch, that market structure shift, whatever it is. So this will be an area of interest, okay, for retail. So I'll mark it out as red because that's not an area I'm typically trading from. Don't get me wrong, it can provide reactions, especially because this is a liquidity block, right? We've ran this area. So this area is a liquidity block, but it's just low probable, okay? Because sometimes we can simply just get a little reaction down and a continuation. So I let the market build liquidity, and then I typically like to trade into that after, okay? So again, we're just approaching New York session here. So what I was seeing was false reaction at the highs, which is perfect. This is what I want to see, right? Because we respect the high and move away. Now we have a reason to push it back up here now. Okay, so I marked that high out. Liquidity tucked above this high now. Now, if you look at the other side of the market, we have a liquidity block down here and internal liquidity right above it. So I was looking for price to trade below this low here. All right. And we can see what price does before. We'll go to the 5-minute. Look how we've taken out here. Okay, this induces buyers, meaning they see that as BOS. They're going to be wanting to buy here, right? So we're not interested in that. Look how it even gives a false reaction to the upside. And then sells off. Cool. So what I did, this was Monday. My entry was taken right below the low. Stops tucked below the liquidity block here. Okay, below this low. Targeting this high. Okay, so my full target was about 100, almost 180 pips. Yeah, perfect. Okay, so I got tagged in. It was about 10:20, so almost 2.5 hours into New York. We went lower once more. Okay, look how we swept this liquidity. And then from here, we get a pullback. I'm pretty sure we mitigate this area and then we move higher yet. So first point, I wanted to take a little bit of partials. I showed you guys, I posted in the Discord, this is an area that we ended up taking, partials at, okay? Why? Well, I saw this as being a liquidity block, so if we were going to get a false reaction, it was most likely going to be in here, maybe a pullback, and maybe a continuation, okay? But I wasn't interested in seeing price 60, 70, 80 pips in profit, and then dealing with the pullback here, okay? So I took 25% off, like I said in the Discord, and then let the rest run. And we'll skip through Asia. Let's go to 15 here. Okay, so Asia ends up taking out this high ever so slightly. If I open this up, you'll see. Like we pierce right above it. And then we get a little sell-off to the downside. Okay, I'm still in this position here, BE. Look how we've now taken out this low. We want to see price trade above this high, okay? Because this is an area right where we are right now. This is where sellers are looking to be getting in the market, okay? Look at false reaction, and then finally traps them, takes them out. Now, ideally, we want to see price back to the downside, okay? Since we've taken out this high, this is going to be a trap here. and we blow right through it. Perfect. So now we're approaching New York on Tuesday. I believe Tuesday, yeah, Tuesday was a no trading day for me. So I get tagged out BE here. Okay, so this entry is done. What ends up happening is we take out this internal liquidity point. Don't forget, we've left liquidity at the highs here. Okay, remember, if anybody's selling from this red box, they got liquidity, their stop tucked right here, and they're looking to target new lows, whatever it is, right? Maybe this down here. They're going to have their stop losses tucked above. All right, so we want to be buying into that. So just for the sake of not making this too long, I know there was no trading day. Why? Well, simply because if I drag this over, we've respected the highs again. Okay, so now think about how many people are now, how much liquidity is now being induced above this high. A ton. All right, and I skipped a little bit too far, unfortunately, but there was one entry here. So we take out this high. Okay, same thing. This is going to be a trap. Look how the price stalls here. 1, 2, 3, 4, 5 candles. Okay, so for about 25 minutes ish. And then we take out the low where people were buying from. Not only that, is we take out the low from the left hand side. Okay, from there, this is going to be trap. Okay, drag this over. That's going to be a trap. And look, if we go to the 1 minute, there was, I believe Avid took this entry. We have highs taken out here, okay? And he took his entry, I believe, when this low was taken out. And just to be a little bit safe, I think he took it like this and to the low. Just to be safe, in case we were going to come and maybe run this low as well, he just kept it stopped below the overall low, okay? The liquidity block down here. Just in case we maybe wanted to come for this. Or if maybe down here. But he just took it here, and again, stop loss below, okay? So that was his entry, and I believe he was targeting the same area that I was looking at, yeah, up here. So I didn't take this one. And this was later in New York on Tuesday. Skip over to Wednesday, and that's when my next long was. So again, like I said, this one ended up stopping BE. Let's follow along and see what price action does here. Okay, so let me mark out when New York is, just so we have a good idea. It's an hour before. Is my timing wrong? Yeah, it looks like my timing is wrong. What's going on here? Oh, no, apologies. Oh, my God. I just confused myself, guys. I didn't take my trade in New York. That's why I'm stumped right now. My trade was taken in Asia here. So I saw that we came up to this area. Again, look at all the liquidity we built at the high, right? One false reaction here, another false reaction here. Okay, now we're approaching the highs again. Look how we're getting more and more false reactions. We'll go into the 5 so we can see this a little more clear. Apologies, I skipped through all of it now, but let me dissect what I saw in Asia last night. So we end up taking out this high, which tells me this is going to be a trap. All these areas are going to be places that retail is going to be getting trapped from, okay? So I wanted to see price below here, all right? Why here? Well, look what happened when we approached this low. Price came down, respected it, pushed up, took out some internal, induced some buyers. So now we can see a trap occur here, right? Now we want to see price below this low, but not only this low from the left, okay? And what do we have right below? Liquidity block. So for my entry, I've spoken about this in the past with my previous students, but as soon as price taps into this imbalance, it can technically go, right? In this example here, it doesn't even tap this candle. It doesn't tap the entry candles to the extreme. It just needed to tap in the imbalance. So that's why I grabbed below this candle here, 1450, 2:50 p.m. I grabbed the bottom of that, the start of the imbalance, drag it over, and essentially that whole imbalance. Anywhere in there, it can technically tap and go. And that's exactly where I took my entry as soon as we tap this imbalance. Like this, Stop loss goes below. Okay. Now, look at the reasoning we have to go higher here. We've left all this liquidity here on a scalpy kind of intraday perspective. And not only that is look at the higher time frame. Okay, higher time frame is screaming these highs need to get ran. Okay, and target goes right there, just like this. All right, and yeah, target hit during London, perfect. But yeah, that's been everything so far on gold this week. Again, this one was a bit frustrating just because I saw how we gave a false reaction here, and then here's entry, and I thought that was going to be enough liquidity for the highs. But hey, it's name of the game. Sometimes it isn't. It came back, tagged me BE, trade was managed correctly, and then reanalyzed and ended up finding another entry. So ended up playing out very nicely. We'll see what the rest of the week has to offer. Tomorrow, so today's Wednesday, tomorrow is a bank holiday. So be aware of that, July 4th in America. And then Friday is NFP. Okay, so I'm not expecting much the rest of the week, to be honest with you guys. But yeah, we'll see what price ends up giving us, all right? But yeah, that wraps up this study on gold. I hope you guys enjoyed, and I will see you guys in the next one.